And good morning. It's February 2020. All trading involves a substantial risk of loss and is not suitable for all people. Past performance is not necessarily indicative of future results. There's a big document full of links to stuff that we do at robbybooker.com/big links. And inside of that big links document, I will link to the latest lesson. I may have done it already. Yep, I did. What a trend trade looks like. That's lesson 15. That should be up and ready to go in your members area. Let's get to February 13th, 2020. Today, we're going to talk about the UVXY, and we'll talk about the pound yen, when to close those trades. And more importantly, we talked yesterday about why you want a $57,000 trade, but we're going to do a full overview of current open trades, and we're going to reevaluate what we have open. And I'm going to talk a little bit about clearing the decks and making way for stuff that does work and getting rid of things that don't work. Remember, we have an open office April 9th and 10th, all day April 9th, half day April 10th. It would be completely reasonable to fly in on April 8th in the evening and stay till the afternoon on Friday. So Wednesday evening arrival, Thursday all day, and then Friday half day, and then get back home for the weekend with your families and friends. So that's in the Woodlands, Texas. Someone asked, where in the Woodlands, Texas? Well, the Woodlands has like a central location with a Marriott and a Westin, and that's the general area you want to focus on, is that general area. There's a lot of different hotels in that general area, depending on your budget and what you want to have. Very much looking forward to seeing you. It's going to be great. We're going to have a good time. Alan, I'd be happy to check EPD, and we'll talk about adding to an existing trade. So let's talk about these two things. So we'll look at EPD. Keep those recommendations coming. When and how to add to a trade. That's a great question, Polly. And I'm going to have I'll talk about $57,000 trades versus $1,000 trades, big trades versus regular trades. And that'll help out a lot. Your question is amazing. I really appreciate it. Thank you so much. Okay, here are our current open trades. There is actually one more not listed on here, but let's walk through these one at a time. The UVXY $12 March calls that I bought for $1.53 are now trading for like 45 cents less, or it's just not going well. So I don't care about the chart. I want to be really clear about the fact that I could care less what the chart looks like. I don't want to go to the chart and say, oh, it looks like it could turn around. That's not interesting to me. I don't care about the chart. What I care about is a traditional rule of thumb that I let's see here. I wrote it down on the chart itself. So we will go to the chart for that. We don't change our rules often or for good, for anything except for the most amazing reasons whatsoever. And the general rule of thumb is that now that my trade is down about $1,000, I am going to give it 24 hours. So I will give this trade 24 hours to turn around. And if it doesn't, then I'm getting rid of it. So I'm going to give this trade through basically the morning on Friday morning to turn around. And that's the way it is. That's the way it shall be forever. And so that's all that I have to say about this. And this chart doesn't look good or bad to me. It doesn't matter what the chart looks like. It matters that I have a maximum loss acceptable on UVXY. I also want to say for the record, if I had traded fewer contracts, I would not have to think about closing this trade right now. But that's an irrelevant point of view. Because once a trade reaches the max loss zone, I'll give it 24 hours to come back and do what it's supposed to do. That might have happened anyway. I could have traded more contracts and I could have already been out. I could have traded fewer contracts and maybe been in the trade until Tuesday. It doesn't really matter, because if it closes at a loss, if it's a loss, that's okay. And it will set up all over again. And it's just not a big deal. And I want to emphasize that as much as possible. Of course, I want it to turn around today. And of course it might. But if it doesn't, It doesn't matter if tomorrow I take a loss or if yesterday I took a loss or if Tuesday I take a loss. A lot of people obsess over that. Like, if I close it, what happens if it moves in the direction that I expected it to? Well, that's fine. That's like pinning all of your hopes on one thing is never a strategy for success. So this isn't the only thing that can work. And although I talk about it a lot, listen, if this doesn't work, then I'm going to throw it in the garbage and I'm going to come back and get my revenge later. And I will have my revenge. So I'm not worried about that. It's very much okay to have a winner turn into a loser if that's the way the rules work. This could have been a $5,000 win. And if I had taken a $5,000 win, we could all be congratulating ourselves right now on how smart we were to take a $5,000 win. But what if we had taken a $5,000 win against our rules and it went all the way to the profit target? Well, then how would we feel for breaking our rules? Like there are these weird, platitudes that people have with trading. No one ever went broke taking a profit. Well, yeah, they do. If you take too small of a profit and you break your rules all the time, you will absolutely, your losers will be bigger than your winners and you will go broke. And the other thing is never let a winner turn into a loser. That's the dumbest thing I ever heard, because once it's up $1, it's a winner. So am I not supposed to let that become a loser? It's a stupid phrase. Of course it's okay to let a winner become a loser. And it's there's never one trade that has to make or break me. So once again, I of course would love to have had $5,000 in my trading account right now. Also, still the same. This could go to $30 this afternoon. Like, there's no way to do anything except follow the rules. We take the trade when the setup occurs. We let the trade go against us if it has to. And if it spends 24 hours in the maximum loss zone, then I will dump the trade. And that's perfectly fine. Now, there's another side to all of this. There's the Johnson Controls trend trade. It's a long-term uptrend. Then it retraced and printed 3 bullish profit circles. And JCI tends to trend for a long time once it starts. So look at Johnson Controls. We took the trade yesterday or the day before, and it's a rocket ship. Haha, Johnson Controls rocket ships. It's doing great. So I'm up, I don't know, $400, $500 today on this trade. Now the point is, I'm going to look at the charts. Now that it's a win, I want to focus on the charts and keep very clear in my mind that this has a target of $42, $43, and it's making progress in that direction. And I do not want to close this trade. Now, if this were already at the green or purple missed pivot points, well, then that would change my mind. It's now time to look at the charts on this trade. This is when I look at the charts. Now, what about adding to this trade? I'll tell you exactly about adding to trades. And Polly, this is for you. There are differences between $1,000 trades and $57,000 trades. There are differences between trades we take with the full trade size and trades we take with a tester trade size. I took Johnson Controls with a full trade size, meaning all the contracts that I could possibly want to trade with in order to make $1,000. So, Polly, I'm not going to add to this trade. I don't want to add to this trade. I'm perfectly happy to leave this exactly as it is. But let's say I wanted to bend the rules a little bit, and I did want to add to the trade. If this retraces and then starts up again, I would wait for the retrace and then wait for it to break the highs that it had made before the retrace. And then I think adding here would be great on a $1,000 trade, meaning the smaller trade that's supposed to make a less significant amount of money and not be some kind of giant win. Sure, if the current trade is profitable, and if the price is better than what I started with, meaning the stock is moving in the correct direction and it's making new highs, I think adding to the trade on that kind of momentum is intelligent. I think it's a smart idea. It's not necessary because I traded the full trade size. So let's say that you know that you can put $100 toward any trade because of your account size. So if you can put $100 toward any trade maximum, let's say you start by putting $50 on the trade. That means maybe you could buy one share or one contract. I don't know what it is, but you can buy one unit. That means you have $50 left over to do what I just said with. And you could use that $50 in exactly the scenario that I just described. Now, I also need to put an alert here so that it moves up. Okay, now what if this is a $57,000 trade? What if this is one of those ones that's supposed to just go bananas? I think in these instances, if you print your bullish profit circle, you get a retrace, and then you break through the highs that it had made, right here, or if it moves up through right here now, like if it really starts to move upward, then yeah, I would add more to that trade as well. But because it's a $57,000 trade idea, I'm definitely going to be more aggressive about adding to this trade because the UVXY does have the potential for doubling in price. I definitely want to put my foot on the gas when those things are going well. Every once in a while, we're going to take a trade on a financial instrument that tends to really, really move. And in those cases, it's perfectly acceptable to add aggressively to a winning trade. I don't want to do a lot of adding to a trade when the first trade is negative. I think that's a mistake. So if I'm going to add to the trade, every previous trade that I'm in on that financial instrument also needs to be profitable. And the easiest way to make sure that happens is to only add to a winning position when it breaks new highs or breaks new lows. Let's look at Verizon because that's going to give us another look at a trade that's going well. I'm up about $720 on Verizon. If I want to add to this position, now I can look at the chart now. I should look at the chart now because it's a winning trade. I know that my targets are down here in the $56 area. So it went down, it came back up, it's coming back down. If it breaks through the $57.54 area, I think adding to the trade is perfectly reasonable. Now, we're not going to talk about which contract to add to it because we don't know where price is going to be then. We don't know when that's going to happen. But I think adding to that winning trade on a break through the lows is a perfectly awesome idea because every previous trade on this pair will also be profitable, and we're going to be adding to a winning position. The market will be giving us great feedback that we have made an intelligent decision, and so that makes sense. I don't like the idea of adding to a position if the current open trade isn't also a winner. So regardless of anything you've ever seen me do or say, that's our rule. Add to winning positions only, and generally add on a break of new highs or lows. Now, it's possible that if we are in a really long-term Verizon trade, let's say that the target we have on Verizon is much, much bigger. Let's say that we are going for a target of $52 a share. We might wait till it drops, wait till it retraces, and the previous position is still profitable, and add on that retrace. Or wait in the midst of a very long downward trend, wait for another bearish profit circle when the previous trade is profitable. That's also perfectly acceptable. This may give us a chance to try that out, although I think the safer, better trade that we should take is down to the $55 zone. So I'm currently profitable on this trade. This trade is currently doing everything that it's supposed to do and I'm going to watch the chart. Why would I watch the chart now? What's the point, again, of watching the chart when the trade is profitable? Someone want to give me an answer? Why would we look at the charts when the trade is profitable and not just the numbers? Yeah, because we want to watch our targets. Yeah. It's not about watching our winner become a loser or worrying about that. It's definitely because we want to focus our eye on the goal. So, as a runner in a marathon, we want to focus forward. And when we get into a trade, it's more like a marathon than it is a sprint. Okay. So, what was the price for JCI? What was the price that I got JCI at? Let's see here. I'm up $140 right now. I paid 81 cents for the JCI calls. There we go. At 81 cents. And that's up about, like I said, $140. So I've got a bunch of trades right now, and I want to walk through them and evaluate them. This is UVXY. It gets another day. Good luck, UVXY. I want to keep you. Home, trading at $6.51. So what am I in on Home? I'm on the $6 20th of March calls. I paid 75 cents for those. It's trading above $6 right now, which is beautiful. And this is a stock that has all of the indications. There's a short squeeze possibly going on. Insiders have bought the stock. It's just, I love this trade, and I definitely want to continue to be in this trade. Johnson Controls is down a bit today, but it is a stock that once it trends, it tends to trend for a long time. This is a trade I want to be in. If the market is bullish and if the stock market is doing well, this is our trend trade for right now on that kind of movement. We're long TLRD. Michael Burry of the Big Short fame bought this stock. Insiders of the company bought this stock. And this is definitely heading to be a short squeeze as well. We're coming up on earnings. Earnings haven't been very much of a surprise and very interesting at all over the course of the last few months. I'll probably hold this right through earnings to give it a chance to succeed. And earnings so far, historically, the last two times that earnings were a surprise, they were a positive surprise, but the stock still went down anyway. Kind of weird, huh? So there was a negative surprise and a positive surprise. There have been instances where after earnings, the stock actually went up. And there was a time when this stock was trending for quite a while after having gone down significantly. So I'm happy to be in this trade. I'm going to stay in this trade. I think this could go to $5, $6, $7, $8, $9, $10 a share. This is Sony. Sony is looking really nice this morning. It gapped open lower. That's beautiful. It has 3 bearish profit circles. This trade, let's see I can't remember the price I paid for this. So why don't we take a quick look at the price that I paid for it? I paid $4.30 for this, and I'm up $10. So this is really not much of a trade yet. $4.30 for those options. And it's trading just slightly lower, the stock today. And it's got tons of targets lower. Now, if it breaks the lows below $69.61, I think it's reasonable to add to this trade on a momentum break lower. I did not put all the available capital I have on this trade on this. I could still buy another 1 or 2 contracts, and I would certainly be willing to do that. The relative strength index has plenty of room to fall, and if it breaks through the lows, I think it's not just a good idea. I think it's a great idea to add to that winning position. We want to press our advantage. We want to be bold about doing something that other people won't do. We want to express confidence in our own good decision making. We don't just want to be nervous when we make a good decision and the trade is going well. We want to be confident and we want to be bold. And I want to teach you how to do that. We're going to have a lot of winning trades that look exactly like this, and we want to make the best of those. I don't want you to be surprised when we have a winning trade on Johnson Controls or Verizon or Sony. I don't want you to be stunned. I want you to be confident, and I want you to feel like, oh, yeah, that's exactly what should be happening every single time we take a trade. So Sony is going well. I don't have any adjustments that I want to make to that. I wouldn't really consider this a stupendous winner right now. It's only up $10. That's not really a significant amount of money. It's only really going to start making money when it breaks through the lows, fills this gap from back in January, and then I think we at least make it down to $66.56 a share near the monthly pivot for January. But then there are other really beautiful missed pivots, like this weekly pivot from December, totally missed completely. Price didn't even try to get there. Now, this missed monthly pivot from December, you can see price tried to get down there and touch it. So this missed monthly pivot is lower quality because it's not really that well missed. This missed weekly pivot from November, price tried to get down and got really close to it. It's a lower quality missed weekly pivot. This missed monthly pivot from November, price tried to get down to it and got really close to it. So this is a lower quality missed pivot. The higher quality missed pivots are at like $66 and $64. Those are really, really what I would call high quality missed pivots that were just completely missed. Price hasn't even yet given a chance at moving toward them. On the negative note is EWI. This is the Italy ETF. I have broken my rules. This was down $1,000 and I kept it open for more than 2 days. It's now down about 0.75% of my total available trading capital. I have to close this tomorrow. I cannot keep this open. There's no way for me to justify keeping this trade open. There's nothing about this that is doing what it is supposed to do. It is not doing what it is supposed to do. This had better move today or I have to get rid of this. I can't hold on to this. And I can always take it again at another time. But I can't break my rules. This is VBTX. VBTX is just going sideways. This is going to get this. I'm going to pull the ripcord on this one and parachute myself down to safety with a smaller loss. Not today. It's not even at a maximum loss. But I want to make room for trades that seem to be going better. I want to free up capital and add to positions that are winning and not worry so much about this one anymore. We bought Drive Shack DS. We bought it back a while ago. It had a really nice Morning Star, Doji, whatever you want to call it, candle yesterday, and it's moving up today toward the weekly pivot. I like this movement. This is an insider trade that has enormous potential. I'm very excited about this. NLS. We bought NLS on the insider technique. And, it's got a lot of room to go a lot higher. And we're just in like the resting phase here. And sometimes that resting phase can take a week or so, and then it can shoot upward from here. We'll see if that happens. I'm long GTE. It printed a bullish engulfing candle. I don't know if that means anything or if that has to mean anything, but I like the movement ever since then. I'm happy to be long GTE. We're long ONTX. What a wild couple of days. Hopefully you took some of your profits on ONTX, as we talked about a couple of days ago. I didn't close any of my position. I'm still long 2,000 shares. I don't want to be the first one in or the first one out. I want to give you plenty of notice about both kinds of decisions so that I'm not getting in the way of anything. I'm not closing this until we get at least to 85 cents a share and hopefully to something like $1.40 or $1.91. Tupperware looks really interesting. This is a Magic Formula investing stock. And it's a stock that tends to do well when it prints a bullish profit circle, and it did, and then it didn't move anywhere, and earnings are coming up. I'd love to see another bullish profit circle on Tupperware. If we got another one reasonably soon, I would count that as two. It's only trading for $5.81, 87 cents. This could be a really nice trade with a ton of potential. I'm long NBRV and thrilled to be long. Bullish divergence, two bullish profit circles, insider trade, very happy to be there. I don't have a trade on CLF, so I don't even know why it's on the list. I'm not long Jack in the Box, although we thought about it, should have taken it, blah, blah, blah. Beyond Meat, I just like looking at it. I think this has another leg up to go. JMIA, I think could go up a lot. I'm long Club. That's got to start moving in the right direction. And I just wanted to look at gold today. Gold's up a little bit. That's good for you, VXY. I think gold is sort of topping out for the time being. At least it appears to be the case. So that's kind of an overview. Today's, coaching call is really about adding to a winning position, and managing open trades. Excuse me, so sorry. Here's EPD by request. Alan, you asked for this, I believe. And there you have it. I don't have much to say about this, positive or negative. I'll walk through maybe some of the things I see that you were looking at. So I could imagine you were looking at all of these bearish profit circles, head and shoulders pattern, but it already kind of dipped after this. Like you can see head and shoulders pattern, shoulder, head, shoulder, neckline, and then it dropped. It's already done. This bullish profit circle right here would have been a trend trade. Beautiful, lovely. And this bearish profit circle is kind of meaningless. It's not enough bearish profit circles to really justify anything. I'm ambivalent about it from here. I don't have any opinion about it whatsoever. LaDonna says, if a trade is not going in our direction, if we have time on the contract, isn't waiting for it to turn around okay? Or with time decay, do we want to get out as soon as possible? Yep. So with 30 days left at expiration, time decay really starts to set in. That's when time decay really starts to affect us. So for our March calls and puts, really, if it's not going in our direction and we've got about 30 days left, time decay is really going to start eating into our position, and we want to just sort of dump it. TJ says, if I think oil is going to appreciate by $15, what's the most lucrative way I can do it? So I would trade options on USO. So if I were in the situation right now where I believe that oil was going up, so TJ, let's take a look at oil. So I don't see any reason why you wouldn't think this right now. Look at that bullish divergence. That's kind of lovely. And it seems like it's bouncing. We've got tons of beautiful missed pivots. So if we went over to bar chart and we took a look at the options chain, the USO ETF is probably the way to maximize whatever capital you do have available. We could look at options prices. I would, probably take a look at the April or July contracts, and I would look at the calls that are sort of near $10.50 or $11. So the $12 calls have 31,000 contracts of open interest. That's beautiful. The $11 calls have 16,000 contracts in open interest. Those are both really lovely. The spread's super tight. I love the $11 July calls. That gives it plenty of time. So look, on this bullish profit circle, it needed 2.5 months to make its full move upward. So you could buy the April contracts. You could probably spend less money to get the April contracts. I don't know what those $11 Aprils are going for. 54 cents. Seems like a steal. So this bullish profit circle, 30 days, 60 days, 90 days, 120 days for that full move. In this bearish move, 30 days, 60 days, 90 days. I'm trying to, it's really hard to bet against commodities, right? It's really, really hard when these things are in savage trends to bet against them. Let's say you took a bullish double profit circle. To get the full benefit of that, we're talking about 30, 60, 90, 120, half a year at least. So some of these commodities, they need more time. But, I think giving it 90 days is a safe bet. You can get a lot of the benefit out of a 90-day expiration. And there's a lot of room on the RSI. So that's one way to handle oil. So let's look at Veri by request. This is Veritone. I don't know much about this company, but I do know that the bullish profit circle situation looks incredible. Wow. That looks really nice. Yeah, that it's trading for a small amount of money. Lots of insiders. So let's go to Open Insider and just check that out. Lots of insider buying. Director purchasing 41,000, 20,000. These are all back in November. The CEO bought 13,000 shares, already owns 4 million. Ryan Steele, looks like Chad and Ryan are brothers. You always know something's fishy. Bought 250,000 shares in the $7 range. Yeah. Wow, this looks really nice. Sure. What's the average volume on this? 316,000 shares. Market cap. Show more. Average volume 355,000. So I'd buy 1,000 shares of that. Let me know if you buy it, John. And Fritz, why only U.S. stocks? Fritz, give me the name of any stock you want to look at. It's only because I'm more familiar with them, but I'm happy to look at any financial instrument you want to look at. So if you give me a request, we've got plenty of time here. I would love to look at anything that you want to look at today. Sue says, hey, I really like the new red circle around the cursor. Really helps following what you're looking at. Oh, yeah, look at that. That seems like a new feature on Zoom. So Brian says, when you get a bearish profit circle, do you look at getting out? I want to make sure, John. Yeah, I don't want to front run you or anything, John, but I want to buy 1,000 shares. So let's say that Veritone rises to $4 and prints a bearish profit circle. No, it's not going to make a difference to me. It's not going to make or break my decision making on this unless it's already also, John, reached that first target that I expected it to reach. Okay, we're going to look at Caterpillar, and then we're also going to take a look at the euro pound and the pound yen. So Caterpillar was a great sell. It was in a reasonably long-term bullish trend, printed like 40 billion bearish profit circles and dropped. It never printed a bullish profit circle, so there was no buy trade available here. And I have no opinion about it whatsoever at this point. There's nothing that I could see that would tell me anything about what might happen next. Okay. Oh yeah, Fritz, I actually love looking at stocks outside of the US as well. And I don't know if you already did this, but if you go into your platform, Fritz, and you pull up, if you just look at stocks, like whatever stocks are in the Saxo platform, like just the top ones or the ones that it pulls up on a watch list or whatever, just grab a screenshot of that and email it to us. And then we can put those on a special watch list in TradingView, and we can look at those as well. And I can look at the top European stocks as well. I can also find those. So I'm happy to do that. I like looking at all kinds of stuff. We're going to look at Axis. That's absolutely lovely. Obviously, we've looked at it before. That's been such a savage downtrend. And we talked about the fact that this was a petroleum company. You know, if you want to go long oil, buying a petroleum company is certainly a way to do it as well. And it is trading for 25 cents a share. So, yeah, that looks definitely like it wants to go up. And you could have a really tight stop loss on it. SPCE, Virgin Galactic. Holy smokes. So, rocket ship. No comment because there's no trade. That looks like if it prints one or two bearish profit circles, that it would be a spectacular move back down. So if it's got a if Cat's got a profit circle on the 3 hour, not the 4 hour, I would ignore it. Especially if it's a bullish one, it's already moved too far for me. Yeah. Okay. Let's look at. I want to look at the Euro US dollar. This is really interesting to me because it's been it's been in such a tailspin. At some point in time, the euro becomes so cheap that it's there's going to be a lot of buyers. And I've said this, I've said this before, and I'm sure a lot of you have heard this, but it bears repeating. So here's what's happening when a stock is moving down like this. What's going on behind the scenes is Deutsche Bank and other market makers in FX. As it's going down, Deutsche Bank has to be buying. Someone has to end up with the buy trades, and it's the bank. So Deutsche Bank and other institutions end up with all the euros, and they are net long a significant amount. And guess what? They do add to losing positions all the time. So when this finally prints a couple of bullish profit circles, even without divergence, this thing bursts higher. But we want to be really careful. We don't want to get in too early on that. But it is getting close to the time where the euro seems like it is oversold. And that's going to be a buy trade when it happens. Here's the euro pound. Wow. The euro is weak. Look at how deeply oversold we are on the 4 hour chart. That's way below. Like if we draw a horizontal line on where the oversold level is right now, we're going to realize that it rarely can ever get that far oversold. Look at the last time it got close to that level. It's kicked off a significant and gigantic bullish trend. And then, maybe even a smaller bullish trend. In every single one of those instances, you really still do have to wait for a bullish profit circle. I can't find a 4 hour time when this thing was that far oversold. The euro's in big trouble right now. Clearly. All right, so that euro pound is getting very close to what I would call a spectacular buy trade at some point in time. Here's the pound yen. Not even overbought yet. It's not even overbought. But the pound has been strong. It's right at the monthly pivot. It's right near the weekly pivot. I don't care about the chart right now. I just care that I'm down $400, and I'm okay being down $400. It doesn't matter to me. I don't care. I'm perfect. It's perfectly reasonable for me to be down that much. I don't care, and I'm going to keep the trade. It's a numbers thing for me right now. All right, so Jason says, do you have any experience and like to trade futures contracts in various commodities? So it's all the same. It's all the same stuff. Like let's look at corn futures continuous contract. Same stuff that we would look at. We're going to look at the perfect trade, and I would look at the 4 hour chart. I would not day trade anything, let alone futures. But you get bullish divergence, you get a couple bullish profit circles, and then we get a nice move up on corn. You get bearish divergence and 3 bearish profit circles, and then you get a nice move down. It doesn't take a lot of movement to make money in futures or to lose money in futures. But the style of trading is really similar. And right now, corn is printing 2 bullish profit circles, but it's not in the midst of an upward trend, so it's very hard to justify taking a buy trade that would, last for any significant amount of time. Like I've never looked at soybeans. I can't even remember a time when I've looked at soybeans. But bullish divergence, bullish profit circle, missed monthly pivot above, sure. Like you wouldn't have to point a gun at my head in order to get me to take that buy trade, Jason. I hope that helps out a little bit. Sue says, I'm in a big drawdown on the euro US dollar. So you're going to get a chance here to buy the euro manually, Sue, with a position size equal to the original position size, the total position size that you have. And let me just, I'll give you a little bit of a, so let's drill down here. 4 sets of bullish divergences on the euro. Where Thursday, this is a reversal day. You could take that trade now, Sue. Now, if you take it with a size that is different than your other positions and you're on Oanda, you can add to this trade and you can stop out of the latest trade without any problem. So let's say that you had 2 mini lots long. You could take 3 mini lots long and still close that below the lows. You could have a 20 pip stop on that trade. Now you have to lose money, like you have to close out of that. And then Sue, you could just, turn off the robots when that trade is all cleared up, like we've talked about in the past, and then focus on some of the stuff that's going to work better for you. All right, so John says, can you show the link to the trade suggestion worksheet once again? I'm not sure I know what that one is because not sure I'm talking about the same thing you are, but there's the bounty spreadsheet at robbybooker.com/bounty. William says, do you consider monthly or weekly pivots more important? Yeah, the longer term they are, the more important they are. Yep, monthly are more important. I don't trade futures, but like I said, TJ, I could if I wanted, but I don't. But you could use Thinkorswim or Infinity Futures or any other broker you like. Dollar General, we'll look at that too. All right, so Dollar General, long-term upward trend, 2 bullish profit circles. That would be the time to kind of enter, but you could still kind of enter a bullish trade now, and it's got plenty of room to go up further, especially in a bull market. That's a trend trade. That's another trend trade, and of course, it can go higher. All right. What a ton of great questions today. Really wonderful questions today. I think we covered a lot of great stuff. Yeah, this was a lot of fun. All right. Tomorrow's Valentine's Day, and Monday's President's Day. So we won't meet on Monday, but we will meet tomorrow because I love you. And we won't meet on Monday. Okay, I'll see you tomorrow.